Good evening, all of you. Am I audible to? Please comment on that. Those who are available in the online, please let me know the my voice is clear. That's mean am I
Yes,
audible?
sir, we can hear you.
Yeah, okay, thank you. Then shall we start the session? Okay. Okay, good evening. Then today we are planning to discuss about the management accounting and finance subject. Okay. In the meantime, during the this session within 2 hours period, I will be bring 60 to 70 marks in the your upcoming exam. Okay. Based on that, you will be able to go through the which I was suggested area during this session. Very basic idea you need to take. Don't worry about the in detail complex calculation. Come with the that means you have to comfortable with the basic thing. Thereafter, you can manage the whatever the difficult area or you are unaware area, you can manage it. But keep in mind, very basic area I will be touched during the 2 hours period. Those area will be enhance your theoretical as well as the practical knowledge during the upcoming exam. Okay. Before moving to the target area, I would like to drag your attention our topics, that is our syllabus. Our syllabus is consist, there are 7 items. Basically, introduction to the management accounting. That is the very lengthy area. That is the 25% percentage available in this syllabus. That's topic including absorption costing versus marginal costing. Thereafter, relevant costing. Thereafter, CVP analysis. Finally, risk and uncertainty. We can call risk. Those area you have to be careful during the exam because why I'm saying that 25% 1/4 exam again හතරෙන් එකක් තියෙනවා. That is the risk sub topic also available in that topic. Thereafter, process costing. Definitely this time also will be tested question in relation to this topic. That is the 15 marks. Thereafter, budgeting. In generally, in this exam, that's mean management accounting and finance subject, there will be a two type of question, that is the basic budgeting as well as the cash budget. Please make a note those area. Basic and cash budget. Definitely 10 marks will be carried out the cash budget. This topic also weight 15%. Thereafter, standard costing and variance analysis. Standard costing and variance analysis. Same percentage. Thereafter, cost of capital. Generally, we call as WACC, weighted average cost of capital. It is 10%. Topic number 6, capital investment appraisal. Generally, majority of the student call as the NPV equation. Keep in mind this topic not in, that means only calling as NVP, but problem is this topic consists of few of the other topic as well. That's mean this is also the 15%. NPV is the basic, that's the major item. Thereafter, sometime examiner has been tested IRR, EAV, profitability index. Those area has been already tested. Then significantly NPV the topic. This time also we expected NPV correction will be there, but keep in mind sometimes EAV or profitability index will be there. I don't know actually it will be happen, but keep in mind definitely NPV correction should be there no, because of this topic available the 15 percentage, then there should be a correction. Sometimes 10 marks will be arrive the NPV, balance part will be the other which I was highlighted area. Please make a note, otherwise you will be weaving this screen and you can think about yes. Likewise, don't do that. Make some notes. Thereafter, you can tolerate next 2-3 weeks. Finally, working capital management. Working capital management, 5%. Okay. I will be make a note. What is the topic? Today I am going to discuss about during this session. Generally, I will be working the working capital correction. Why I am saying that this correction will be available in the first 3 correction, including first correction. And generally, there will be a correction number 2. Generally, correction number 2. Cost of capital. Correction number 7 will be there. Based on the trend analysis, I can say this correction available with the correction number 7. Okay. Thereafter today I will be discuss standard costing correction as well. CVP correction as well. Not only that, capital investment appraisal, that's mean NPV correction, NPV, net present value correction. Other than that, relevant costing. Under the relevant costing, I will be selected limit in factor analysis. This time, 10 marks, that the 10%, that the 10 marks will be arrived. Actually, I don't know this will be, that mean this kind of correction will be there actually, but we can guess that that mean we can target, no? We can hope based on the experience as well as the trend analysis, we can make some prediction, forecast. That is the way. Based on that, during this session, you will be able to, which I was mentioning the earlier, at the very beginning, 60 to 70 marks. You will be, that means almost you will be go through the exam. Other remaining topic up to now, you will be cover up whatever the lectures you are conducting the JMC. Then based on that, you will be able to touch those areas as well. But I will be touch 60 to 70% during the time limitation. Okay. Then shall we start our target area? Okay. I will request all of you, please download this past paper. 2021 January. 2021 January correction paper. Please download. Please download that past paper 2021 January. Did you able to download the past paper? Please let me know. Lamai, please let me know. I think there are few student has been comment on that. Dhananjana or Dhananjana, I don't know. Abdul, Nuanmi, Hasni. Am I audible to all of you? Okay. If you able to download, in the meantime, you can download it from the AAT website as well. Don't worry about that. Then we will start the question number 2. This time, most probably this kind of question will be there. I thoroughly emphasize this is the forecasting thing. If it is available, that is the trend analysis. Okay, question number 2. 2021 January, question number 2. Market Limited, that is the question. Market Limited operates a chain of small supermarket, and the following information has been extracted from the financial statement for the year ended 31st March 2020 and 2019. Once you read the header of the question, thereafter don't read out the remaining information. Quickly go through the requirement. That is the exam technique. You are required to calculate the length of the working capital cycle. Sometimes examiner will be asked, please calculate the working capital cycle. There is no word length. Generally, working capital we can say based on the number of days. It will be called as the length. That is the way. Then be careful once you read in the question. Please, that's mean be careful mean you have to read the end of the area as well as the question, because of the there are 2 consecutive years, that is the consecutive 2 years information is available. Based on that, you need to know about what is the year examiner will be tested. Generally, that question has been tested in the 1920 period, 1920 and 1890. Why they are providing the 2 different years? You know that when we calculate in the working capital cycle, there are 3 elements there. There are 3 elements. I hope you all of you are able to write down this area syllabus and what are the area we will discuss during the session. Okay, 2021 question number 2. Working capital cycle including 3 elements: inventory resident period, number of days. Thereafter, you have to add data collection period. Data collection period. Finally, you have to deduct creditor settlement period. You can use this abbreviation. Don't worry about that. Based on that, you can save in the time when we compare with other student. Generally, single medium. අපි සිංහල මේක කියනවා නම් තොග රඳවා ගැනීමේ කාලය කියලා ලියන්න ඕන. But in English medium student, they can say inventory resident period IRP, data collection period DCP, creditor settlement period CSP. Then you have to write down the working part. Then very easily you can go through the question. Before moving to that one, you have to read out the remaining information. Okay. Sales figures has been provided: inventory, trade payables, trade receivable collection period, and gross profit ratio for the year 1920 were 53 days and 20% respectively. All sales are made on the credit basis. That means there is no cash sales. Every sales has been made based on the credit basis. The examiner has been provide the information trade receivable collection period. How many days? 53 days. Then it has been mentioned no need to make a working number 1 and working number 2. Thereafter you will be able to come to the length of the working capital circle. Okay. Working number 1, working number 2. Inventory resident period. It will be calculated based on the number of days, no? Then you have to take the 365 days. Generally, particular year per annum, there are 365 days, 0.6 hours, but we can ignore that and 365. Then here also 365 should be there. Okay. Firstly, we are going to calculate the inventory. Secondly, creditors. When we calculate the inventory resident period, you have to take the average inventory. If we take the average, creditors also average creditors. Inventory will be linked with the what? Cost of sale. Then you have to divide it by the cost of sale. Creditors will be generated based on what kind of transaction? Credit purchases. Purchase. Generally, we can say credit purchases. Then you will be able to calculate the figures. Average mean you have to take the 2 different years figure, sum the 2 different year figures and divided by 2. Okay. Average inventory. Inventory figures 1920 and 1890. Then 925,200 plus 944,800 rupees. That is the 2 years inventory, but here we need to know about the average. Then you can divide it by 2. Then it will be the average figure. Thereafter, you have to divide it by the cost of sale. Unfortunately, cost of sale figure has not been provided, but you have to work out it. This is the way. Generally, sales, cost of sales, then gross profit. In this question, based on the sales figure, gross profit margin has been mentioned. Gross profit margin is how much? 20%. Based on the sales, 20% is a gross profit. Then cost of sale is how much? 80%. Okay. Then sales is how much? 6,022,500. Based on that, you can take the 80%. 6,022,500. 4,818,000. Then we are going to calculate the 90-20 figures, no? Then 4,818,000. This is the way. Based on the GP margin, you can arrive the cost of sales figure. Why I am taking 19-20 figures only? Because examiner will be asked, you have to calculate the working capital on behalf of which year? 19-20. That's why I will be take that year figures only. However, when we calculate in the average figure, we have to take the 2 different year figures. Why examiner want to know about the average? Why we take the average? Can we take the particular year closing inventory? We cannot. Why? Inventory figures mean every time will be that's mean fluctuate during the period. Then you have to know about the estimate figure. That's why we are going to average. That is the normalization concept. That is the standardization. Otherwise, particular end of the period time, there will be high inventory. Then our decision will be the mislead or misguide. That's why we will be tolerate during the period. That's why we are taking the average. I don't know. You will be able to get the average figure by using the formula. Why that formula has been put into the average? To normalize the inventory. Based on that, we can take the some tolerable amount. Otherwise, it will be the mislead in the decision. Okay. Hope all you are touch with my communication. Isn't it? Please let me know the all of you are working comfortable with the calculation as well as the exploration. ළමයි ඔයගොල්ලෝ ඕකේද කතා කරන්න? නැත්නම් මම මේක හදිවට වැඩක් නැහැ. මොකද මම I am not going to the exam. You are the person going to the exam hall. During that time, you will be able to tackle those information by using the question paper. එහෙම නේද? ඒක නිසා ඔයගොල්ලෝ කතා කරන්න please. ඒ කියන්නේ ඔයගොල්ලෝ කතා කරන්න please ask from any question from me. Okay, what is the figure based on this? $925,200 plus 900, 400, 44,800 divided by 2 divided by 4,818,000 into 365. 70.833. Then we can say 71 days. Is it correct? 71 days. ළමයි කියන්න answers. ඔයගොල්ලෝ group එකේ chat කරනවද කොහොමද chat box එකේද chat කරන්නේ? $71 days inventory resident period. Thereafter, same method. Trade payable figures also available. 891,700 plus 813,300 divided by 2, then it will be average figure, then divided by the purchase. Same method. We have already calculated the cost of cap, that's the cost of sale. 4,818,000. No? Cost of sales figure will be derived based on this method. That is the opening stock plus purchases deduct closing stock. Isn't it? Then opening stock is how much? Opening stock will be 1890, closing inventory. How much? 925,200. Closing inventory during the year 944,800. You don't want to go through the past papers, you can take these figures, same figures. No? Then final figure, that is the cost of sale, 4,818,000. When we deduct the 944,800, thereafter this will be the net figure. No? If it is the net figure, this one, then you will be able to calculate the gross figure by adding this one. Then That amount should be all together, no? Both 5,762,800. This 5 million figure will be arrived by adding this one. Then you can remove and identify the purchases figure. That is the backward calculation. You know the final answer, then you have to calculate the backward method. Generally, we will come to this method, top to bottom. Here, bottom to top, backward calculation, we can say. Then 5,762,800 minus 925,200. 4,837,600. Is it correct? Am I correct? Credit purchase goes to 4.8 million. Please, lamai කියන්න. Based on the silence, I will think, is it correct? Then multiple by 365. Here you have to multiply by the 365. It is the same. Please take the how many days? 891,700 plus 813,300 divided by 2 divided by 4,837,600 multiplied by 365. 64.32. Then we can say 64 days. Then 64. 71 plus 53 minus 64. That is the 60 days. Working capital cycle is 60 days. Is it okay? Hope all of you are able to go through this calculation and identify the basic things. Okay, now we move to the question number 3. This is the 2021 question number 2. Now we will move to the question number 3. Question number 3. 2021. This question is related to the, what is our topic? Budgeting. Budgeting. Panels limited. There is a panel limited. Then manufacture and sell panel for use the interior decoration. That's mean interior purposes they will be used some panels. The company budgeted to manufacture and sells 11,000 units for the year ended 31st December 2020. That is the 2020 particular calendar year period. They hope to produce and sells how much? 11,000 units. Due to the COVID-19 pandemic that those days, the company was unable to meet the sales target. Oh, unfortunately, they are not in a position to achieve the target. How much they achieve? Achieve only 5,800 units. We compare with the 50%. more than the 50%. If it is the 50%, should be the 5,500, no, more than that, lesser amount is higher. Unfortunately, they are not be able to achieve the target. Somehow they achieve 50%. Balance part have not been achieved due to the pandemic situation. Okay, don't go through the table information. Why I'm saying that, if you read or not, you don't know what are the requirement. Then very basic thing, you need to know about the requirement. You are required to prepare the flexible budget. Sometimes examiner will be asked, you use the flexible budget, or sometimes they will be say, please calculate or prepare the operating operating statement also will be called as the flexible budget for the year ended 31st December 2020. 5 marks will be the this question. Okay, problem is, they budgeted quantity is how much? Budgeted quantity 11,000. Actual quantity is how much? Actual quantity 5,800. Actual information available, there will be actual information. Then those information actually on behalf of how many units? 5,800. But we established the budget on behalf of how much? 11,000. Can we compare with? Yes, we can compare with. Why? අපිට මේක compare කරන්න පුළුවන් නේ. Why I am saying that? Because of the all of the figures are numerical figures. Then we can compare. We can take the difference as well. But problem is, our basement is wrong. 11,000 unit related cost should be matched to the 11,000 unit actual information. But here 11,000 budgeted figures, we are not going to match with the 5,800 unit. Then this fixed budget, we call as this is a fixed, no, we already designed this one. Then we call as that is a fixed budget. That fixed budget quantity related whatever the cost, you have to have what? You have to have change how much would be the 5,800 unit. When you convert into the 5,000 unit relevant cost, keep in mind fixed cost will not change even 11,000 or 0. That means 5,800. අපි 11,000 වලදී 5,800 වලදී උනා කියලා අපි ගාව තියෙන fixed cost. If we are having the fixed cost, fixed portion, it will be not change. Generally we call as remain, that means this cost will be remain the same. Even though we will produce higher amount or lesser amount, that cost will remain the same. එහෙම තියෙනවා. But variable cost should be matched with the conversion factor. Got the point? When you go through the 11,000, that fixed budget figures, keep in mind fixed cost portion components will not be changed, remain the same, even though 11,000 or 5,800 actual. But keep in mind, at the same time, variable cost should be matched with the conversion factor. That means particular cost, we assume 4,000 rupees is available on behalf of the 11,000, then you have to divide it by the 11,000. You want to know about the how much would be the 5,800, then multiple by the 5,800. That is the variable portion only. Fixed portion will not be changed, remain the same. Is it okay? Please let me know. Those who are get the point. Got it? ළමයි ඒක ඕකේද? බය නැත වොයිස් අන්මියුට් කරලා කතා කරන්න. අද කතා කරොත් then you will be able to go through the exam with the highest marks. Okay, I hope all you are comfortable with the explanation. Then I will be moved to the calculation part. Okay, now you can go through the figures. The following information is extracted from the year ended 31st December 2020. There are budgeted figures. That budgeted figures column, you can say that is a fixed budget. How many units? 11,000 units. Actual column relevant to the 5,800. Then they have been asked the flexible budget. Flexible or operating statement. Operating statement. Then flexible and actual. Flexible column, actual column. First, get the sales figure. Sales figure 7,150,000. For how many units? 11,000 units. Then divided by 11,000, then you will be able to get the per unit. Then you want to know about the actual quantity is how much? Then 5,800. Then it should be converted into the 5,000 unit. How much? 3,770,000. Then I will be take the 1,000 figures. Then we can easily. Then actual amount is how much? 4,000. That is the 4,200 based on the 1,000 figures. Thereafter, you have to deduct. What is the first one? Direct material, DM. Direct material is how much? 3,250. That is the variable cost. Then divided by 11,000 multiplied by 5,800. How much? 1,716.8. Then actual 2,360. Thereafter, direct labor, direct material, direct labor also the variable cost. Then 1,745 divided by 11,000 multiplied by 5,800. $920.09. Is it correct? Then here 910. Please let me know if there will be some deviation with my figures and your figures. Generally, my figures will be changed due to the live calculation. If not, you can go through. Variable production overhead. Variable production overhead. 913 divided by 11,000 into 5,800. 481.4. Actual variable production overhead is 364. I am working with the 1,000 figures. Then fixed production overhead. Fixed production overhead will not be changed. 268 will be the same even 5,800 or 11,000. Why? Fixed cost is remain the same cost. Even though we will change the number of unit, cost will not be changed, remain the same. Actual cost 168. Fixed distribution overhead. How much? Same approach. 283. Here actual 283. This is the flexible figures based on the fixed budget. If it is an operating statement, you have to calculate the variance as well. Variance. Variance means difference between the flexible amount and actual amount. Based on the flexible budget, we hope, that means we are planning to collect 3,770. However, actually we collect more than our expectation. That is the favorable. How much the difference? 430. That is the favorable, no? Favorable, positive. We can say favorable, positive. That is a good sign to the organization. Why? Based on this average, the fixed budget, we are expecting the 3,770. However, actually, we earn more than the expectation. That is a benefit, good sign to the organization. Then that is the positive, 430. If it is an operating statement, this variance column should be there. Okay. Thereafter, direct material costs based on the flexible figures, it should be the 1716.8. But actually, we incur more than the expectation. That is the adverse. How much? 651.2. That is the adverse. That is the negative sign. Adverse. Thereafter, direct labor. 920.09, 920.09, that is the our expected cost. Actually, we incur lesser amount, 910. That is the positive sign. 10.09. Favorable condition. Thereafter, variable production overhead, 481.4. But we incurred lesser amount, that is the positive sign. 364. 117.4. That is the favorable. Favorable. Thereafter, fixed production. That is the 268, 168, 100 saving. Favorable. Thereafter, 283, 283. There is no deviation either. There is no either favorable or unfavorable. Keep in mind, once you finalize these columns, you have to take the final figure. That is the total column as well. Please make a comment on that this calculation as well. No comment yet, please. Abdul, Situmi, Nuanmi, Hasni. Yes, yes. Those who are participating, that's the part. Every participant message I can see. That's me live session. During the live session, I am available with the whiteboard. Then I have to come with the laptop and I have to see. Otherwise, there should be some time to see. But if you send some message, I can see. Okay, there was a question, sir, how adverse and favorable is calculated. That's how we get it. This is the method. In the revenue side, that is the revenue, no? Sales is the revenue, no? Revenue means here, based on the that's the flexible budget, we expected 3,770 rupees. That is our expectation. That means we expected, we hope, we are planning to collect this much of amount. Actually, what is our collected amount? More than this one, no? That's means here 3,000 figures, here 4,000. Our expectation exceeding by the actual figures. Again, අපි බලාපොරොත්තු වුණාට වඩා වැඩියෙන් actual market එකේ අපිට chance එකක් ඇවිල්ලා තියෙනවා. Then that is a favorable, that is a positive signal to the organization. අපි ලාච්චුවට ගෙන්න ගන්න. We are planning to collect some money that is the 3,770. But actually we can be able to, that we could be able to collect it, realize based on the market is how much? 4,000. That is the excess of our expectation. That is the favorable. That is the revenue side. Expenses side, that is the vice versa. මේක expenses වලදී අනිත් පැත්ත. We expected to spend 1,716.8, but actually we spent more than that. ඒ කියන්නේ අපි බලාපොරොත්තු වුණාට වඩා. That means when you come into the physical classes, you are planning to early morning, I am planning to spend 5,000 rupees, that is the 500 rupees during the day. But actually due to your friends and your buying behavior and your habitual pattern, you have been able to spend 600 rupees. But your expectation is 500, you spend more than that. That is the adverse. If you spend lesser than you expected, then it is a saving to yours. When you are going to the home, you will be able to save some figures. But unfortunately, if you are spend more than that 500 to more than that, then you have to collect somewhere, that is someone from the money additional amount. Here, look at 1,700, that is our expected amount. We are limited to, that is restricted to spend. But actually we spend more than that. It is more than that we spent by the actual figures, then that is the adverse. Here 920 we can spend, but actually we spent lesser amount, then 10 rupees will be the saving. That is the favorable. I think is it enough to get the favorable and adverse figures? Please let me know. Okay, now we move to the other question. Now we will be able to get the 10 marks altogether. Question number 2 and 3. Thereafter, please move to the question number 7. Please move to the question number 7. Quickly we will go through question number 7. Please read out the question. LST PLC is a company listed in Colombo Stock Exchange. The following information is provided for the company. Then LST means a listed company in the share market. Then they have been provided some information relevant to their source of capitals. ඒගොල්ලන්ගේ තියෙන company එකේ capital structure එකට අදාළව some information has been provided. Thereafter you have to go to the requirement column. What is the requirement? You are required to calculate the following: cost of ordinary voting shares, cost of irredeemable preference shares, cost of redeemable debentures, finally weighted average cost of capital using the market value. Altogether it will be carried out the 10 marks. That is the 1/10. 10න් එකක් paper එකේ විතරින් දැන් test වෙනවා. Okay, before moving to this question, I will be provide some short notes on behalf of this one. Source of capital, that is the sources. In generally there are two sources, that is the equity capital other one debt capital. Under the equity capital, generally that is the ordinary shares, sometimes preference shares, generally we call as irredeemable preference shares. Irredeemable preference shares. If it is a redeemable preference shares, it is the debt capital. Redeemable preference shares. Redeemable. Not only that, debentures, sometimes corporate bonds. Those are the source of funds. Equity holders will be provide the money to the organization. Otherwise, that the equity holders not in the position to provide as soon as possible their funds, then we have to select the another alternative. Then we can say debt capital structure. Whatever the method, if we collect in money, we have to pay some return on behalf of them. Otherwise, they will not be encouraged to keep their money in the organization. Got the point? ඒගොල්ලෝ දැන් අපේ ඕනම කෙනෙක් there should be encouragement no. දැන් කවුරු හරි යවුවොත් why I am doing lecture, there should be some motivation as well as the encouragement. That's why I am doing the conducting the lectures. Otherwise, I will not do it. Sometimes due to the passion. Sometimes there will be a hobby. Oh, whatever the reason should be there. That's why we are doing the lectures. Not only finance figure. Same as investors, they will invest somewhere else on behalf of that expected return. ඒගොල්ලෝ බලාපොරොත්තු වෙන return එකකට තමයි invest කරන්නේ. Then those funds sources are available to the whatever the organization. Then if we are planning to collect either equity or debt, then we have to pay some amount of return to them. Otherwise, they will not be retain their money in the organization. Got the point? This topic, if we collect some money from the particular source of funds, then we have to pay some amount of the expected return. Then we have to know about the what is the average figure. What is the average figure? Average cost of funds. ඒ කියන්නේ දැන් මෙතනින් අපි funds collect කරගත්තාම what is the average? Each and every holders are expected to different rates, different expectations. But as an organization, as a whole, we have to take the average figure. That average figure will be based on the weighted weight. That weight will be based market value generally. Market value. Okay. Then those are the source of funds, no? That is a capital providing method. We call as a weighted average cost of capital. Here, weighted average cost of capital. WACC. Generally, we can say WACC. First letters. WACC. WACC. WACC means whatever the source of funds available, those who are providing money to the organization, then we have to take the average figure based on what? Market value. Then this question also has been tested with you have to calculate the weighted average cost of capital. There are three sources. First one, we will read out the LST PLC is the PLC has a 40 million ordinary voting shares. That is the ordinary shareholders. Please make a short note. I think all of you are able to write down this one. Quick, hurry up. Equity capital, debt capital. Equity capital will be consist the ordinary shares, preference shares. Preference shares is the irredeemable preference shares. Debt capital, preference shares is the redeemable debentures or corporate bonds. Whatever the source of funds available, we have to average cost of funds. It should be weighted based on the market value. It will be called as the WACC, weighted average cost of capital. Thereafter, we have to calculate the cost for the each sources. Another short note I will be provide. cost of equity. We can say RE. In our examination, there are three methods. There is the constant dividend. If it is the equity holder will be receive constant dividend. Constant dividend due with growth. We call as the Gordon growth model, GGM. Gordon growth model, GGM. Thereafter, CAPM, capital asset pricing method. Here, how we calculate the return on equity? Risk-free rate plus risk of market minus risk-free close bracket multiplied by the beta factor. Okay. This technique still has not been tested. This time also will not be tested. Why I am saying that? Based on the experience. Generally, those two techniques will be tested. Constant dividend method, if it is a particular equity holder expected to the fixed dividend, how we calculate? P0 equal, that is the market value of the particular security, will be equal to the dividend divided by expected rate of return. Here we are going to calculate the expected rate of return. Then you have to the cross multiplication. Haras gunitiya bhavita kara. Then RE equal to the equal dividend divided by market value. Okay. Then growth model. There should be some growth, no? Then here P0 equal to the dividend open bracket 1 plus G, that is the growth, divided by, generally RE is here, minus by G. Why? Expected return included consists the our expected growth, then we have to remove it. Then how will we find out the RE? Then you have to use the mathematical knowledge. Then you have to do the same cross multiplication method. Then RE minus G equal to D open bracket 1 plus G divided by P0. But we are going to identify the find out the RE only. Then RL will remain with this side, the left hand side. Then you have to move to the growth rate to the other side. Then minus growth rate will be go to the equation other side. It will be the positive figure. Then dividend 1 plus G divided by P0 plus growth rate. That is the second technique. I think this will be the short note. In this question, you have to decide which is the formula you have to use. Based on my experience, I have already informed CAPM will not be tested. Then these two methods will be the mix up this year and next year likewise. Here, now you can come to the question. LST PLC has the 40 million ordinary voting shares in issue, which were issued at 10 rupees per share at the inception of the company. That's been established of the company. At that time, they have been issued 10 rupees. For the last year, a dividend of rupees 1 that is 1 rupee and 20 cents per share was paid, while the dividend are expected to grow at 8% per annum. That's they are expecting the growth. Growth means you have to use the second formula, the second method. Got the point? Here, if it is a constant dividend, and that's the infinity period. Until end of the organization, there will be a fixed dividend. Then you can use this method. But unfortunately, this ordinary shareholder not expecting to the fixed dividend, that is the constant dividend. They are expecting to dividend plus growth. Okay. The current market price of the ordinary voting share is rupees 80 rupees. That means at the establishment time, their issue price is how much? 10 rupees. Due to the demand and supply balance, nowadays that ordinary share has been sold out at what rupees? 18 rupees. Then you can use the second formula. I think you have been able to write down this short note as well as the cost of equity. Okay. Now we will calculate cost of equity. Cost of equity. If someone already calculated, please let me know the figure. Okay. 2021 Jan question number 7. First one, cost of voting ordinary shares. Here P0 is how much? P0 means the market value, market price per share. Market price per share is how much? 18 rupees per share. Then D0, dividend. How much do they have been recently paid? 1 rupee and 20 cents. Thereafter, how many shares? Number of shares? Number of shares is how much? 40 million number of shares. Here we have to calculate the cost of equity, that is the REOKE. Then we have to calculate. Here there is a growth. Then P0 equal D0 plus 1 plus G divided by RE minus G. Then when we derive to the one terms, then RE equal to D0 1 plus G divided by P0 plus growth rate. Then you can substitute the figures. D0 is 1 rupee and 20 cents. Growth is how much? Growth rate is 8%. That means 0.08 divided by, what is the market price? 18 rupees plus 0.08. What is the percentage? What is the percentage, Lavai? 15.2. Is it correct? 15.2. Okay. Thereafter, the company also has a 6 million irredeemable preference shares. Irredeemable means there is no redemption time. Those shares will be available until company will be wound up. ඒ කියන්නේ company වහලා දානකම් මේ preference shares ටිකක් තියෙනවා. Then 6 million irredeemable preference shares which were issued at the 10 rupees per share. Annual dividend of dividend for preference shares is rupees 1 rupee and 50 cents per share. Market price of the preference share is 12 rupees. Then this share also, if you remember, please go through my previous working, that's my previous short note. It has been mentioned under the equity capital, there are two types of equity capital providers. Ordinary shares, which we already calculate, as well as the irredeemable preference shares also considered as a equity capital. Why? They also available until company will be wind up. Okay, then cost of equity, that is the method. P0 equal to D0 divided by RE. E mean equity, cost of equity. Here we are going to calculate the preference shares, then we can change. Instead of E, we can use P, RP, return on preference shares. Here, there are two characteristics available in preference shares. There is a preference, that is the priority to settle the other debt before other debt. Second one, fixed dividend component until their expected period. Then we can use this method for irredeemable debentures. Okay, please use this formula. Then cost of preference shares. What is the market value? I think if I not mistaken, 12 rupees. Dividend 1 rupee and 50 cents. RP is the we are trying to find out. Then you can use this formula. P0 equal D0 divided by RP. P0 is the 12 rupees. Dividend is 1.5. RP is the our expected figure. Then RP equal 1.5 divided by 12. How much? 12.5. 12.5. Is it clear? Is it clear? What about the other participant? Only 2 or 3% will be available in the chat. Abdul, Maniha, Shifa, Nuanmi, Mizana, Hasni. Dilakshika ni. Sorry, number දෙනවනා. Yusuf, Rasan, Priyanka, Kenoli, Imalka, Harita, iPad කියලා කෙනෙක් ඉන්න මන් දන්නේ නැහැ හරිද කියලා. මම හිතනවා රීනේම් කරගන්න බැරි වෙලා වෙන්නේ නැති කියලා. Okay. If someone name has been erroneously pronounced, extremely sorry for that. Okay. Thereafter, final source of capital. What is the question number C has been asked? Cost of redeemable debentures. Okay. Another short note. How to calculate cost of debentures. In generally, one method will be tested during the exam, but before going to the exam, you have to be tackle the whatever the different scenarios. No, then in debentures, there will be market information. We can say with market information. If it is a market information available means particular organization has been listed in the CSE, Colombo Stock Exchange. Then another method, if it is not, that is the without market information. That means particular organization has not been listed in the CSE, that is a private placement. How can calculate the cost of debentures? If it, generally, debentures holders are expected to collect, those holders are expected to dividend. Here, they are expected to interest. Generally we can say interest. පොලියක් බලාපොරොත්තු වෙනවා. If we particular that the holder expecting interest, that person can be claim tax saving. Tax saving. When we calculate in the tax, we can save based on the interest. Interest portion we can deduct when we calculate the profit. But if we pay dividend, can we deduct from the when we calculate the profit? Can't. Once we identify the profit, thereafter we will decide shall be distribute profit or not. That's the mechanism. But before calculating the profit, you can deduct the interest. Then it will be the available in the tax saving. Then without market information, you generally we call as the KDORD, cost of debt or return on debt. RD, there is no market information, that is the without market information. Then interest I will be denoted by the interest, simple I, open bracket 1 minus T. Why I am using T? Due to the tax saving. That is the RD, without information. If it is with the market information, there are two methods, 1.1, 1.2. Please make a short note. 1.1, if it is a market information is available, that is with market information, then RD equal to I open bracket 1 minus T. If it is a market information available, then market value is it there, no? Market information is available, then market value be there. Then divided by P0. Here, this will be calculate irredeemable debentures. Irredeemable debentures. Irredeemable means infinity, unlimited lifetime. There is no certain time period. If it is a certain time period, redeemable debentures. If it is the irredeemable debentures, you can use this formula. If it is the irredeemable, there is no standard alone formula. You have to calculate the IRR for those cash flows. IRR for redeemable cash flow techniques. Please write down this short note. In generally, in debenture side, the examiner will be tested this area. In general, majority of the time, examiner has been tested in the redeemable debenture. Certain time period there has been mentioned in their agreement at the time of the issuing debenture. Then 5 years, 3 years, 8 years likewise. Then you have to calculate based on the cash flows IRR value. That is the IRR figure. IRR will be called as the return on debt. Please make a short note quickly. Hurry up. Time is up. Another 24 minutes more. Once you finish, please make a note on the chat box. This kind of short note should be there. Based on that, you can easily go through, then collect the marks. I think we will receive the confirmation from those who are complete the short note. Just finish. Kenuli, Rasan, Yusuf, Setumi, Harita, Rifda, Hasni, Mirsna. Okay, majority of the student has been completed. Then we will move to the third part of the question, that is the part C. Please make a short note. 15.2 to 12.5, 15.2, 12.5. Those figures we need for the further calculation. Okay, now we calculate the redeemable cost of redeemable debentures. Cost of redeemable debentures. Cost of redeemable debentures. Here, the company issued 5 million listed debentures at rupees 100 per debenture with a coupon rate. Coupon rate means the interest rate. Under the coupon rate, you can make a note. That is the interest rate, 12% per annum. The debentures are redeemed in 3 years. That is the 3 years later, it can be redeemed. The current market price of the debenture is rupees 95. That's the particular certificate has been mentioned, the 100 rupee worth of the certificate, but we can purchase it at the what price? 95 rupees. That is the market based on the demand and supply. Okay, then market value is 95. Interest is how much? 12%. That is the 100 into 12%. That is the 12 rupees. Thereafter, number of years is 3 years. Number of debenture is how much? 5 million is there. Based on that, you have to calculate the IRR. Then first of all, you have to mention the cash flows. Years cash flows. Year 0. If you are in a debenture holder investor, then you have to spend 95 rupees. Thereafter, 1 to 3 years period, you will be received 12 rupees, but keep in mind, it will be available the how much? Tax. Please go through this question. Is there any tax rate? There is no tax. That means T is 0. If it is T is some percentage, then you have to take the after tax figure. I should be, please mention after tax figure. After tax. But here tax rate is 0. There is no tax information. Then we can say this 12 rupees is after tax. Generally after tax. If it is after tax, how we calculate? If we assume 30%, then 12, 1 minus T. Then 12, 1 minus 0.3. Then you will be get the this one. This amount we can say after tax. Fortunately here, tax rate is how much? 0. Then 12 will the after tax. There is no tax. Got the point? 12. In 3 years time, you will be receive 100 rupees. Is it okay now? After tax figures? Then you can take the discount factor. Based on the practice, we will take the 10%. In year 0, if we receive just now, 1 rupee value is how much? Today terms, 1 rupee. There is no any cost of on behalf of that figures, 1 rupee. In today's terms, in same amount, we will be receive 1, 2, 3. That is the number of 3 years. That is the 3 number of years. We will receive same amount. We can say annuity factor. Then how we calculate the annuity factor? 1 minus 1 divided by 1 plus R power n divided by R. That is the formula. All of you are aware with this formula based on the FAR subject as well as at the leases, LKS, I think IFRS 16, no? IFRS 16 also available this formula, same formula. In the investment appraisal, if it is a certain amount, at the specific amount we will receive the number of years, then we can call annuity. Those cash flows we can call annuity. This is the annuity. 3 number of years, that is the consecutive number of years, we will receive the same amount, we can use the how much the today value. At the 10%, then 1 minus 1 divided by 1 plus 0.1, how many years? 3 years divided by 0.1. What is the factor? If I not mistaken, 2.487. Same figure, you can take the annuity factor table also. 2.487. Here only third year. Third year figure we will calculate based on the present value factor. 1 divided by 1 plus r power n. 1 divided by 1 plus 0.5, we take the 0. That's the 10% in 3 years. Here 0.751. 0.751. That is the 1 rupee value. Then we have to take the multiplication on these cash flows. Present value at 10%. 95 into 1 rupee, then 95 minus. Then 12 rupees into 2.487. 29.844. Then 100 into 0.751, 75.1. Then get the net present value. Get the net present value. What is the value? 9.944. IRR mean at the rate of, what is the IRR mean? That is the rate particular the investor minimum required amount, or what is the rate NPV become a 0. But unfortunately here NPV has not been 0. That means 10% is not the IRR. Then we have to use the trial and error. Then we have to take the another rate. Then we have to take the higher rate or lesser rate. If it is a 10%, we will receive the positive figure. You have to take the higher amount, that is 15%, 20%. If it is at the 10%, you will be able to get the minus figure. Then you have to take the lesser percentage, 5%, 7%, 8% likewise. Okay. Here there is a positive figure. That means at the rate of 10%, you are not coming to the NPV 0. Then you have to come to the that means near to the 0. Then you have to take the discount factor as we will take 20. It's very easy discount factor. Thereafter again you have to take the present value at 20% as well. Thereafter you will be able to get the some NPV figure. Fortunately at the rate of 20 NPV becomes 0, then you can say that is the rate IRR. IRR will become the return on debt. If it is not, you have to use the IRR calculate by using the formula. Then we will calculate that one. Okay. Whether it is 10% or 20% or 15%, today 1 rupee value is same. There is no time value of money. Then here annuity factor should be at 20%. Annuity factor 1 minus 1 divided by 1 plus 0.2, that is the rate 20%. How many years? 3 years divided by 0.2. 2.106. 2.106. Then present value factor 1 divided 1 plus 0.2, that is the 20%, 3 years. That is the simple time value of money. 0.579. 0.579. Then you have to calculate the present value. Here you have to take this cash flow into this. Okay, 95 into 1, 95 minus. Then 12 into this one, 12 rupees into 12 rupees into 2.106, 25.272. 100 into the 0.579, 100 into 0.579, 57.9. Unfortunately, at that rate of 20% also we are not coming to the 0. NPV becomes 0. That is a minus. Then IRR should be mid between 10 to 20. Mid between means different between this rate. Then how we can say? By using graphical solution we can say. Look at board. Here discount factor. Here NPV axis. This is the 0 junction. Okay. At the rate of 10%, 5%, 10% approximately. At the 10% NPV become 9.9. Then 5, 10. 9.944. Then here that is the figure. That is the graphical presentation. At the rate of 20, double no? 20 minus 11.828. Then here. That is the axis. Then you have to match those two corner points. Then you will be able to come into the NPV line. This is the 0. That is the rate we can say that is the IRR. NPV become 0. Then IRR will be available more than 10%, less than 20%. That is the between those rate. Is it okay? Please let me know. Is it okay, all of you? This question will be tested definitely, okay? It will be carried out the 10 marks. Okay. Quickly we will calculate the IRR. This is the graphical solution, but this method we cannot say 15%, 16%, 70% likewise, but we cannot say. If we use in the Excel, we can say, but we are working on the manual exam, then you have to use the formula method or any other already no method. That's the already, if you have familiar method, you can use. I will say very simple method. Get the discount factor and NPV figures. At the 10%, how much? 9.944. At the 20%, at the rate of 20%, minus 11.828. Get the difference. Here difference is how much? 10%. This 10% we can say 0.1. 0.1. Here don't take this different 2% because of the here positive figure and negative figure. There is a positive figure, here negative figure. What is the difference? All together, no? Got the point? This is the 0 junction. Here 9%, here 11. All together how much? What is the difference between this? 20, almost 20 likewise, no? Get, without getting coefficient, get the summation of the those figures. Got the point? I am asking for the difference between these two distance, not the 0 to 9%. 0 to 9%, 9. 0 to 11, 11. Total distance is almost 20, no? Got the point? Am I correct? All of you agree with me? Please. Okay, I think all of you were able to clear that one. Then what is the difference? 9.944 plus 11.828. 21,772. Then we are going to identify the IRR from at what rate? 10. Then IRR equal to, we will be going to, I will be draw, we will going here to here, no? This is the point. Then we will be going to 10% to our expected point. Then at the 10%, 9%, that the 9.944 is the value. Then we will be dropped by 9.9. Then NPV will be become 0. Then rate will be goes up. Got the point? Then we will be start our walk-in, not the work-in. I am talking about the walk-in. That means we අපි ඇවිදගෙන යනවා rate එක හොයාගෙන. Which point we will start our journey? At 10%. That's why we 10. Then we have to add. Once we drop in the 9.944, then NPV 0 junction will be there. When we drop in our NPV, rate will be increase. Walk in, that the goes up. Okay. Then you have to get this method here. Then 0.1 divided by 21.772. 772. That's mean 1 rupee value you will be able to get by using this formula. Then 0.1 divided by 21.772. Then this answer will be say 1 rupee value. How many rupees you have to be dropped down at the 10%? You have, when you need to become NPV 0, how many rupees you have to drop? 9.944. Then your NPV will be come to the 0. Then you have to multiply by 9.944. Then that is the difference. Then 10% is this one. That is our starting point. Journey started at the 10%. That is the additional walk-in percentage. How much we have to walk with 10%? 4.56. Then this is the 10% is the 0.1. 14%, 56. Got the point? Please. If it is today in, you will be able to use this formula. Don't worry about that. You can practice it. If you are master with this method, you can use at the exam hall. If you are not interested in this method, you can use the whichever is you have already know the techniques. Whatever the techniques, there should be a approximately 14% rate. Approximately 14% rate should be there. Not the 13% or 15%. There should be a between 14%. That's the 14%, 1, 2, 3, 4, 5, whatever. But starting percentage should be the 14%. It should not be 13%, no, 15%. Got the point? Please. I think you will be able to get the new technique as well. අලුත් ටෙක්නික් එක ඕකේද ළමයි? Okay. Now we move to the WACC calculation. WACC calculation, weighted average cost of capital. Weighted average cost of capital. Now you need to get the source of capital. Sources. First one ordinary shares, second one preference shares, third one debentures. Thereafter, get the market value. How we say market value? How many ordinary shares? Ordinary shares is 40 million. 40 million ordinary shares. What is the market price? P0 is how much? Same question. Rupees 18. Then multiple by the 40 million into 18 rupees. 740 million. Then preference shares, how many preference shares? 6 million. 6 million preference shares. I will be tackled with the million figures. Then what is the preference share value? Market value? 12 rupees. Then 6 into 12 rupees means 72 million. Debentures? How many debentures? 5 million debentures. What is the market value at the debenture? Market price of the debentures is rupees 95. Then 5 million into 95. 475 million. Then all together, total 72 million, 72, 475. 1267. That is the total market value. Thereafter, you have to get the cost as a percentage, okay? Or decimal figures. If it is a decimal, it is better, cost. Did you remember what is the first rate at the cost ordinary shares? I think if I not mistaken, 15.2. 15.2 means 0.152. 15.2. You can use the decimal place. Thereafter, 12.5. 12.5 means preference shares 0.125. 125. Here, this is the rate. This rate 0.1456. 1456. That is the cost. Then get the market. Now we have already get the market value. Then multiple by the cost. Then you will be able to get the weighted value. Weighted value by multiplication. Get the weight value. $720 into 0.152. 109.44. 109.44. 72 into 0.125. 9. 475 into 14.1456. 69.16. Altogether total is how much? 187.6. Then this is the total market value, each equity or debt value. This is the weighted value. Then when we calculate in the WACC, weighted average, you have to get the weighted value. Weighted value total 187.6 divided by total market value 1267 into 100. 14%, 80 average figure. That's mean WACC 14.80 means if we obtain 100 rupees from each sources, we have to pay 14 and 80 cents rupees. Otherwise, they will be not retain their money in the organization. Okay. Now I think all of you able to tackle the cost of capital question as well. It will be carried out the 10 marks. Please comment on that quickly. Hurry up. Dear student, please. Harita, Imalka, Imalka, Priyanka, Razan, Setumi, Yusuf. Ahmad. Okay. Now we move to the question number 9. Question number 9. Same paper. 2021 question number 9. Please read out question and get the what is the requirement. Care Limited is a healthcare provider is currently assessing the viability of the new project. That means they are searching, is it better to invest new project in the health sector, which involves the purchase of the medical testing machine at a cost of rupees 120 million. That is the machine value is 120 million. They are looking, is it good investment opportunity based on their evaluation. Therefore, I think they are considering this method that this investment is it good to this organization or otherwise they can withdrawal from the investment opportunity. Based on the our calculation, they will be decided. Okay, based on the examiner point of view. Okay, then requirement, you are required to calculate the net present value of the project. That is the 13 marks. Assess the viability of the above project based on the above computed NPV. If it is a NPV is 0, then there is no benefit to the shareholder. If it is a NPV is plus, there is a value addition to the organization, then we can accept it. If it is a negative means there is no value addition to the organization, it will be decline in the investors retention, then we have to reject it. Based on the NPV, if it is 0, it will be decided by the management. NPV plus, it should be accepted. NPV minus, it should be rejected based on the our calculation. But keep in mind, in practically, those figures will be the assumption figures. It will be changed based on the actually. But in question or whatever the calculation, you have to use the assumption figures. Based on that, you can make a suggestion to the top management. NPV is positive, it is good to go. Likewise. Okay. If the machine is brought, it is estimated that the cost per test will be 520 for the direct material. Thereafter test will be the 500 for the direct material, 320 is for the direct labor, 100 rupees for the variable overhead. The company will expected to charge 2000 per test from the patient. That is their collection. If we use this kind of new machine, then we can collect 2000 per test one patient. Then over the next 5 years, the company expects the demand for the test to be given below, that how many tests during the particular year period they have been estimated. Year 1 50,000, year 2 50,000, year 3 54,000, year 4 56,000, year 5 38,000. The fixed overhead cost per annum is estimated 30 million, which included depreciation computed for the testing machine on the straight line basis over the useful life of 5 years. That means fixed overhead included the, what is the value? Depreciation. Depreciation is not the cash flow. Then you have to remove that depreciation component from the fixed overhead. Care Limited pays income tax at the rate of 28% per annum. It should be paid in the same year. Once we earn in taxable profit, we have to pay tax. If it is a tax loss, you don't want to pay tax. The company is eligible to claim capital allowances at the rate of 25% of the same new machine. That means in the taxation, we know that if we purchase the particular capital asset, we are entitled to get the capital allowance, not the depreciation. Depreciation should be add back, then remove the capital allowance, that is the tax benefit. Care Limited cost of capital 15% per annum. That means previous question has been, we can compute the cost of capital. That is the method. That is the figure you have to use calculate. Here directly mentioned is the 15%. We have to get the calculation purpose. Okay. How long period this project is goes to? 5 years period, no? Next 5 years they have been forecasted. Question number 9. Question number 9. Then you have to draw the 5 years period. Year 0, once complete the 12 months, it will become 1 year. Another 12 months completed, 2 year, third year, fourth year, fifth year. That is the lifespan of this project. Then initial investment. Initial investment is how much? Initial investment, we will be calculate 1000 figures, 100, 20,000. If we invest, it is a cash outflow. There is no any other cost during the project period. If the machine is bought, it is estimated the cost per test will be direct material. Before moving to that one, then you have to get the cost. Before cost, I will be suggest you have to take the cash inflows. That is the sales. Sales. Single year you can draw. Thereafter examiner can be imagined what is the method you have been used. Year 1, how many test? 50,000 test. Year 1. What is the value? 2000. If we use the 1000 figures, that is the 2. 50,000 into 2 is how much? 100,000. No? Then year 1, you will be able to get the 100,000 rupees. Then year 2, how many tests? Same, 50,000. What is the test per patient? 2,000. But here we will take on the 1000 figures. Then year 2 also you will be receive the 100,000 rupees. Year 3, you don't want to write down. You can get the 54,000 into 2, 108. Next one, year 4, 56,000 into 2, 112,000. Last year, 38,000 into 2, 76,000. That is our sales or revenue. Thereafter, direct material, that is the cost outflow. Per test is how much? 540. 540 means 0.54 into 50,000. 27,000. Next one also the 27,000. Next one 54,000 into 0.54. 29,160 if I not mistaken. Thereafter 0.454 into 56,000. 30,240. Final year 38,000 into 0.54. 20,520. That is the cash outflow. Then direct labor. Direct labor is how much? Per test 320. If it is the 1,000 figure, 0.32 into 50,000. First figure you can be elaborate, thereafter examiner can be imagine. You cannot imagine, you have to calculate, compute 50,000 into 0.32, 16,000. Same, no, 16,000. Thereafter, year 3, 54,000 into 0.32, 17,280. Is it correct? Please let me update. 56,000 into 0.32, 17,920. 920. Time is up. Don't worry about that. We will finalize this question as well. 38,000 into 0.32, 12,160. Is it correct? Direct labor. Thereafter, variable overhead. Variable overhead. 100 rupees. That is a 0.1 into 50,000. That's the 5,000. Thereafter also the same 5,000. 0.1 into 54,000. 5,400. Thereafter 5,600. Thereafter 3,800. What else? Now income and expenses already okay. Now you have to get the fixed overhead portion. Fixed overhead cost included the what cost? Depreciation. Then first of all you have to calculate the annual depreciation. Annual depreciation. How we calculate the annual depreciation on the straight line method? First of all, you have to take the cost. Cost is how much? 120,000. Is there any scrap value or residual value? There is no residual value. What is the depreciable amount? Depreciable amount is same cost. Then what is the useful lifetime? 5 years. 120,000 divided by 5 years. Then per annum, annual depreciation is how much? 24,000. Then examiner has been mentioned fixed overhead is the 30 million rupees. It included depreciation. How much they included? 24. Then 6,000 is a fixed overhead portion each and every year. Then you have to take the calculation for the 6,000 per fixed overhead cost per year. If it is fixed, there is no change. It will be remain the same. Fixed overhead work in number 1 under this one. Then you will be able to come to the 6,000. 6,000. 6,000. Irrespective of the production, cost will not be changed, will be remain the same. That's why we taken in the same figure, 6,000. Okay, now you have to take the tax payment. Tax payment. when you calculate the tax payment, you have to take this one and get the capital allowance. Net of this one. Net of this one, how much? Then get the under the working number to get the net amount. 100 minus 27 minus 16 minus 5 minus 6. 46,000. Same, no? 46,000. Here 108 minus 29,160, 17,280, 5,000. That's 5,400, 6,000. 50,000, 160, 111, 12,000 minus 30,000, 30,240, 17,920, 5,600, 6,000. 52,240. Last year, 76,000 minus 20,520, 12,160, 3,800, 6,000. 33,788. It is correct. No, it is wrong. 33,520. That is the profit. But keep in mind, this profit not included the depreciation. Then no need to add back again depreciation. Why? This cash was not consisted the depreciation. No need to add. Then you can deduct the capital allowance. Capital allowance based on the tax. Capital allowance. How much? The 25%, no? That's mean 4 years period we can claim the capital allowance. Then 120,000 divided by 4. 120,000 divided by 4 means 30,000 per year. We can claim as a saving. Final year there is no capital allowance. Why? 25% is capital allowance. Thereafter, you can calculate the taxable profit. Taxable profit. Taxable profit. 16,000, 16,000, 20,160, 22,240, 33,520. What is the tax rate? Effective tax rate is 28%. Then you have to calculate the 28%. Each and every profit. 16,000 into 28 means 4,480. Please calculate. Thereafter, here also 4,480 tax payment. Third year, 20,160 into 28%. 5,644. 5,644. Thereafter, 22,240 into 28%. 6,227. 6,227. Final year, 33,520 into 28%. 28% means tax rate. 9,385.65. We can take 5. We can say 5. Then tax payment. It is a cash outflow. 4,480 deduct. 4,480 minus. That is the deduct. 5,644 deduct. That is the tax payment is a cash outflow. 6,227. 9,385. Is it okay? Please. Please give me the comment. All of you are comfortable with this calculation? Okay. Now we have to get the net cash flows. Net cash flows. Net cash flows. All together, how much? How much? Here, net cash flows. Net cash flows. Here, 120,000 minus. Thereafter, 41,520. 41,520. 44,516. 46,000. 13 rupees. 24,135. That is the net cash flow. Thereafter, you have to take the discount factor. Discount factor at 15%. Today, 1 rupee value is the 1. There is no any time value of money. Thereafter, here how we calculate 1 plus 1 5 power 1. 0.870. 0.756. 0.658. 0.572. 0.497. Then you have to multiple the net cash flow into the discount factor. That is the present value at 15%. 120,000 minus. Then I will be take the all together by calculator. Then it will be called as the NPV. How much the NPV? 120,000. 41,520 into 0.80. 36,000. I will be draw. 31,389. There are decimal places. 44,516 into 65.8. 29,291. I will be calculate the approximate figure. 46,013 into 0.572. 26,319. 24,135 into 497. 11,995. Altogether, how much? NPV become 15,170. That is the NPV positive. Then our recommendation is it is recommended to accept this project. It is recommended to accept this project due to the NPV become a 0. So NPV become a positive. Okay. Is it okay? Please comment on that. This kind of question, if it is available, you have to make a hurry to for your calculation. Is there any question? Okay. Due to the time limitation, time is already up. Don't worry about that. Then today we have been able to discuss basically investment appraisal question. There will be a 15 marks. Then WACC calculation, weighted average cost of capital question, it will be available the 10 marks almost, that means 25 marks. Apart from that, there was a flexible budget. Definitely flexible budget will be there. I hope, that's been I expected. That's mean I am targeting that area. Then there will be a 5 to 10 marks. Then 30. Working capital cycle question should be there under the question number 203. Then 5 marks will be carried out that one. Then 35 marks. In the meantime, definitely this time, we hope process costing question will be there. Definitely the general process costing question is there. Keep in mind, uh, under the process number 2, generally examiner has been tested in the process number 1 process costing question, that is the opening WIP, working capital, that is the work in progress, and closing work in progress. But here keep in mind, sometimes there will be a possibility to test not the process 1, process 2 question. That will, there will be a consecutive, that's a consecutive 3 to 4 processes related production line. Process 2 or 3 related process costing question will be there due to the misleading of the student, because the very easy question, same methodology you have to use, but keep the concentration which is the process examiner has been tested. Okay, process costing should be there. When grow to the that the please find out the some past paper question and go through those area. In the meantime, standard costing definitely. Then this time will be the direct labor. My suggestion, my expectation, direct labor advanced variance should be there. Direct labor advanced variance will be there. Based on that, you have to calculate the profit calculation, that is the operating statement. Apart from that, during this syllabus, that the 2025 syllabus, examiner never ever tested the linear programming. We hope that's been we encourage to don't ask that question. We don't know why, what is the reason behind that. Still, during the new syllabus, previous syllabus has been tested one time. This syllabus is still not been tested. Linear programming. Apart from that, limiting factor question should be there. Limited factor. Please make a short note. Process costing should be there. Definitely there. Standard costing under the advanced variance. What kind of advanced variance? Direct labor. Limiting factor. There will be 3 different limiting factor. You have to identify. There will be a limiting factor. There will be a scarce resources. Based on that, you have to identify which is the limiting factor. Then risk and return. Based on the probabilities, you have to calculate the expected return. Likewise, question. Based on that, that is the consist of the this time question paper. Another 2 to 3 weeks available. Then you can go through the whatever the classes you have been already discussed. And today, I hope you have to encourage very basic area as well as the examiner will be tested area. Why I'm selected the 2021 question paper? This kind of question paper will be there in the 2025, because of why I'm saying that another 4 years period already has been passed. Then examiner will come the first and see what is the I have already beginning of the syllabus I have been already tested. Then very basically he will be test again same method 2021 or 2020 paper in the 2025. Why recent papers already student aware, but they will not think about the 2020-21 paper. Definitely examiner will be bring that approach to the 2025 also based on my experience. I hope. Okay, I don't have any link between the paper setter. I don't know who is the person, but based on my experience, I hope this kind of pattern will be there in the 2025 January, that is the February paper, beginning of the February week. it will be the better month for your professional journey. Based on this JMC learning team, we have been able to encourage you to finalize your final level special seminar series based on the management accounting and each and every subject covered in this session. Hope you will be touch with the remaining topics as well, that's the remaining subject as well. Based on that, you will be able to become a very near future fast finalist, as well as once you become able to get the 1 year training experience, then you will be able to get the professional member in the professional accountancy body. Based on your journey will be the very easiest, and this will be the foundation your professional journey. Hope based on the JMC learning team as well as the on behalf of the JMC, I will be thanks for them as well. Then I am Kosala Madusanka Jayavira. I have been able to conduct this session as well based on the JMC and learning team. Thank you so much. Have a nice day. Good night.